Welcome to the BullCast podcast. I'm Katie Pickler, and we got Cam back.
Hey-o, it's good to be back, y'all.
He was, we told you he was on his history lesson last week.
Tromping, is that a word? Tromping around D.C. with the children?
That works. Yep. And we got Court still here. He's hanging on.
Yay.
Okay, so this is going to start a 3-part series. You don't necessarily have to listen to these next 3 in order, but we are doing it as a 3-part series.
This is the first time we've done a series, and God, I don't know how long. It's been a minute.
It's been a long time. This is the Bull series, a 3-part series on the stock market. History of the stock market. Last we talked about tariffs, back to the basics, back to just very general of what is the stock market, the history of it. Then we're going to talk about indexes and just go even further into a little bit more the in-depths of the stock market itself. Nicole has put together a BullCast Trading Floor game.
I love games.
I did not think I would be the one to be the analytical question person. I really would have pegged Court to be this person. But we start going over this, and it's the idea is each of us are going to pitch 3 companies. Now, in interest of time, it may end up being just 2 or 3 companies each. And then we're going to try and sell the other host on becoming an investor, buying stock in our company. Negotiate, kind of explain kind of how the deals went by through all this. Of course, in my brain, I'm thinking, okay, are these initial public offerings? Are we already listed on the stock market?
And the listeners are asleep.
Exactly. I'm going too deep down the rabbit hole. This is fake companies. We're just having fun. Okay? Each of us kind of explain our company. Cam.
Oh, the pitch.
The pitch. What is your company?
Slingers.com. What do you think that has to do with? It's not naughty.
No, it's disc golf.
Disc golf.
Slinging your disc.
This, my friends, is a first of its kind subscription service.
Oh, you're going like...
for disc golfers. I'm making a pitch. It's like Shark Tank.
You're going like Shark Tank on us.
I sure am. Quickest growing sports in America is disc golf. And so for all these people, you can subscribe and get a box of discs each month.
Oh.
And on top of that, you get free subscription to watch all of your favorite disc golf tournaments a month. Slingers.com.
Sounds like an interesting company. So you're wanting to have some investors purchase some ownership of your company.
Of course.
Okay.
My startup company has invented a collar that you can put around your dog's neck that interpret the dog's barks into text messages that it sends via Bluetooth or Wi-Fi directly to your smartphone. Everybody wants to know what their dog is saying, and this lets you do it. So I'm looking for investors.
I don't know that I want to invest because I feel like Cam, this would replace us. Court would not need to ever talk to us again because he would just be having conversations with his dog.
With the puggles.
Listen, I already have some embarrassingly long conversations with AI things all the time now.
Yeah, you're now starting to fight with them.
The second that they started letting you do voice talking with AI, one of my other pursuits obviously is legal stuff, and the legal research tool that I use has artificial intelligence. So I'm constantly between that and ChatGPT. I'm constantly going between the two and chattering. I don't need friends anymore.
Katie,
Okay,
what's your company?
so my company is working on the name still. It's probably going to be like My Stylist. It is also going to be a service. We'll work with you and put all of your clothes, each individual piece, into this software. So think about Clueless.
You've been dreaming of this
I've been dreaming
years.
about this for years because then there's going to be an offshoot branch of costumes as well, because then it can be like, oh, I need to dress up like this. And it's like calculating all your different costume pieces, put this together, and there's your costume. So it really is helping you because, people meal prep. So why can't you outfit prep? So you can outfit prep for the week and you've got it figured out. And you're being a better steward of your closet because you're able to really then not be like, oh, I forgot about that, the back of my closet. This is a service. Let's face it, while you're sitting there waiting at that red light, even men can use it while they're sitting on the toilet, spending quality time on their phone, figure out what they're wearing. That's my company.
Interesting. So we've got sports, organization, maybe, entertainment, companionship.
Definitely companionship. Then it's going to be like, this is how I knew my dog was in love with me, and we're going to have marriages from...
Oh, my word. Why did you have to go there?
Because that could happen.
Jeez.
It could.
We're talking about your company. We have to think about the positives and negatives of it and deciding if we want to be investors or not.
Okay.
That's true. So how does this work? Do we go to round 2 or do we trade now?
Well, so the idea behind the game is a little bit more intense than what we would normally get into, especially for our intro.
Yeah.
The idea here is really these companies are looking for investors and or looking for an established company that already has stock being traded intended to encourage people to buy shares of that stock, and differentiating between what you said an initial public offering is versus what an already existing company that's being publicly traded, and how those two different things work. I don't know if we want to get into that just to play this game.
This game idea is great, but one of the things we don't want to do is just get so deep into this that you're like, wait, hold on. Y'all are talking about stuff I don't even know about. But for example, okay, what if we could say, well, Cam, your company sounds exactly like Stitch Fix, but for disc golf. What makes you think you'll be successful?
It'll be successful because it encourages fitness and getting outdoors and exploring a new sport. Unlike Stitch Fix, which just gives you clothes. Who needs clothes? Come on.
See, and I think it'd be like diving deeper into it of like, okay, what's the safety protocols on the collar for the pet? Is it going to be faulty because you're trying to make them cheaply and the dog is going to get electrically shocked?
Jeez, God, no, I'm not doing anything cheap.
Or will it put words in their mouth that they're not even saying?
Yeah. How are they keeping up with it's actually what they're saying? And it's not just
pick up the knife, Court. Pick up the knife.
Yeah. I mean, we got to worry about this stuff. And then, mine, it's like being intrusive of what private information could I be giving out of here's all my clothes. And now is someone able to hack and see I've got all these expensive pairs of shoes or coats or stuff like that?
Well, interestingly enough, speaking of a company that is currently publicly traded, sounded like a brilliant idea 15 years ago, whenever it came out, 23andMe. They've recently just announced that they're filing Chapter 11 bankruptcy. The idea of finding out where you're from and who you're related to and what diseases you might be genetically predisposed to, that was cool to get people started on them. But what they realized is that they didn't have a sufficient hook to get repeat customers. And so they tried like a subscription model, and that apparently has failed. And so now they're filing for bankruptcy. The interesting sort of question that raises is kind of like, you could have a super, super cool idea, even successful as a private company, but then you go public, and all of a sudden when you go public and your stocks are being traded, the people buy your stocks because they expect to receive something out of that stock. They want a return on their investment, which means you have to be profitable because you have to have something to give back to the people who have invested. And apparently 23andMe couldn't come up with something they could give back to their investors. The founder of the company, who was also the CEO, was trying to take the company back to privately held. She could continue it, but didn't have to worry about investors. She did not accomplish that. The board voted to file for bankruptcy. She resigned. Now she's trying to just purchase the company through the bankruptcy process. So we'll see how it goes. But, when you're dealing with startup company, even the most brilliant idea, okay, this is a brilliant idea, to actually putting it into effect with all of the safety precautions that you'll need, and then actually making it profitable to the point where you could actually take it public and really generate profit for your stockholders. That's a long game. That's not something that we can accomplish in a list.
And so much of it is also your personal, because we've talked about that before, that who are the spokesperson for the company, who's the actual owners, who are the big key owners for everything. They can make a difference personally what they do. We've seen that if this is a product and all of a sudden a celebrity that nobody really likes anymore is the main face of it, it can tank a stock. And it's a big deal going from private to public, because private, you hear in movies all the time, like, oh, well, I have 49% ownership. Well, then the second that you start opening it to be public, yes, there's still that balance, who's owner, who is the bigger shareholders, things like that. But then you're starting to get gobbled up and there's multiple owners involved now. It causes a lot more dynamics. This is a really cool concept. This may be something that we revisit at the end of the 3-part series, and kind of now that we've got a little bit more basis of what's going on.
Can I tell my 2 other companies?
Yeah, go ahead.
A Ice Cream.
A Ice Cream.
The first self-driving ice cream truck company. See, A Ice Cream. It's pretty cool, right? It just comes straight to your door. You don't have to chase it down.
Yeah.
Your kids are never
Does it
sad.
play the music?
It's cool music.
Okay.
It's got like Dolby subwoofers. It sounds cool.
Okay, because the ice cream truck music, no bueno.
And
Every child knows that sound. Doesn't matter.
my third idea is called no headshots.
No headshot.
What job do you need a headshot in? It's acting, right?
Acting.
Yeah.
Another subscription-based service where if you subscribe, you are guaranteed one speaking role in a movie or TV show. No headshots required. No auditioning. Isn't that pretty cool?
Yeah. How are you going to pull that off?
So no headshots, just voice recordings.
It's a terrible idea.
No, it's fun. So obviously we pivoted this game a little bit. We did not go through the haggling, the negotiating, things like that, because obviously when you're looking at if you're a real company, then stock, privately, those negotiations are done a little differently. That is more of a, Cam, if you'll invest with us, you'll agree to this contract, I'll give you 20% ownership of my company. Versus then when you're public, or a lot of times they're maybe like sweetening the pot, like, hey, you come on and be my COO, you're going to get this percentage of the company. So there's a lot of deals that happen after the idea is really formulated and the wheels are turning.
Yeah.
So this was kind of a silly way to show how trading is all about negotiation value and a little bit of luck. Because luck on the investor side, you sometimes are not privy to be at the table when they're discussing these things. And so you don't find out about these companies until it becomes public, initial public offering. IPO. For centuries, trading happened under trees, in coffee houses, on handwritten agreements, eventually evolving into the stock market we know today.
Okay, guys. I know we have an outline to keep to.
Yep.
We've got a lot going on here, but I've got some very important questions.
Okay.
Because I'm kind of an idiot when it comes to this, and we need to really dumb this down, not just for me, but for our listeners.
Okay.
So before we move on to the origins of stock trading and anything else we want to discuss today, I'll just round robin you all with questions. Is it a deal?
Sounds good.
Sure.
Court,
What?
I'm going to hit you first.
Me first?
Yes.
Why do I always have to be first?
Basic question.
Okay.
What is a stock?
It's funny. It is a basic question. Our assumption here is that people are listening to us have probably at least some familiarity with the stock and have heard of it and know what it is. But as basic as the question is, it's also not really a majorly simple answer. A stock is basically the ownership units of a company. When you have a company that is a corporation, at its founding, every corporation is founded with a set number of stock shares. Each one of those shares, like for instance, if I've started up a corporation for somebody recently and we said that there were 1,000 shares to begin with. So 1/1000th of the company is represented by each of those stock shares, and whoever owns them owns a piece of the company. If you own all of the stock shares, then you own all of the company. Not all companies are publicly traded. So when we talk about the stock market, we are talking about companies that are actually publicly traded. Their shares are available for anyone to buy on the stock market, and shareholders have rights. They can vote on who is going to be on the board of directors. There's an annual meeting for the shareholders that they can attend, and so on and so forth. But that's for the publicly traded companies. Yeah. If you're a privately held corporation, you still might have stocks, and they are not basically, they are the same thing as a publicly traded company's stocks. It's just that they're not, you may have 1, 2, 3, 5 owners that have divided up the shares of stock of the company represented by
your ability of what you can do with those private shares are a lot different than your public.
Yeah. Obviously, if you own a majority of the company's stock, then you are the majority owner of the company, and you can make all of the decisions based on the fact that you own the most of it. But I guess that's the simple explanation.
Yeah. That was very helpful. Thank you. Katie, you ready?
Yep.
Why does the stock market exist? Like, what is its purpose?
Okay. Again, very complicated, but in a nutshell, it exists to help facilitate the meeting of buying and selling of securities. Remember, securities are stocks, bonds, and it provides a marketplace. So it provides a place for investors to trade and for companies to raise capital while also ensuring fair market prices based on supply and demand. So it's allowing a safe space, a little safe space here, where people can get together and hey, I've got, 50 shares of disc golf company, and I'm going to sell it to Court because he really likes disc golf. So it's bringing people together where there's some regulations, there's some, making sure things are handled appropriately. and makes it a little bit simpler. That is it in a nutshell. So kind of the bullet points when you look at a stock market, it's facilitating trading, it's raising capital for companies. So what does that mean? A company may go public because they need to build more cash flow. They need to have more money coming to them so they can say, hey, we can start selling a piece of ourselves. That then gives us some money in our pockets to then build our company further. So raising capital, corporate governance, economic efficiency, determining fair market prices, investment opportunities, diversification, and liquidity. Again, those are all very high level where the stock market really does a lot, but at the core, it is just a central location where everyone can come together to act on this.
That makes sense.
I mean, yeah, the stock market, as most people think of it, is probably most represented in pop culture by the New York Stock Exchange.
Yes.
I think when people think of the market, they think of the New York Stock Exchange. Everybody's seen a movie or a TV show with people in the
Yelling in
middle
the
of the
room.
New York Stock Exchange yelling at each other. And that's so when they think of the stock market, I think that's probably what they think of. But there are multiple different kinds of exchanges. In addition to the New York Stock Exchange, there's NASDAQ, there's all these other ones, but they all serve basically at their fundamental level the same purpose, which is giving people a forum in which to trade their securities. I'll give
You're not having to do shady deals. You've got a place you can go.
Yeah. Okay. I'm learning every time y'all answer a question of mine. So mission accomplished. Court, I have another one for you.
Uh-oh.
I know in the next episode we are scheduled to, in part 2, to talk about indexes. And when I think indexes, I think of the ups and downs, a little roller coaster. What makes the stock market go up and down?
I'm sorry, there is no basic, simple answer to that. There are so many factors that cause an individual stock's price to go up or down.
Or stay the same.
There are factors that may affect one company or one type of company and cause their share price to go up or go down because of some circumstance that doesn't affect all companies. But then there are also something that will affect the entire market, market cycles. I think we're probably going to touch on market cycles in episode 3 or...
Yeah, that's market sentiment is what you may see a lot of times. And it's just what is people's opinions overall of the market.
I don't want to get too much into the weeds on this, but part of what you would hear us talk to our clients about when we are talking about their ownership of securities is their portfolio, and diversification is a real big buzzword for us. And the idea behind diversification is just to really, really simplify things. If you own 2 stocks of 2 different companies, you want to try and make whatever affects company A and affect its share price not also affect company B and its share price in the same way. If all of the stock you own is all affected by all of the same things, then if one company's stock goes down because of a threat of tariffs, for instance, if your diversified portfolio, all of the stocks, they may be of different companies, but they're all affected by the same thing, then your portfolio is going to drop. And so that's why you try and have different securities, not only different companies, but also different types of securities, like Katie said, stocks and bonds. So you're literally dealing with stocks, which are the ownership of the company, and bonds, which is debt that the company has basically. If you own a bond, you've made a loan to the company, right?
And you could be guilty by association. Your stock could be impacted if the industry trend, if so that sector, that industry that your stock happens to be a part of, if your company's doing well, having great, earnings reports, things like that, but everyone else in your industry is sinking, you could be caught in the crossfire.
Yeah.
So there's a lot of different elements. It's not as easy as supply and demand.
I literally have been taking a class on stock valuations. And I mean, you asked me that question and like all of these equations pop into my head.
A beautiful mind.
He's getting his chalkboard ready.
It is amazing the amount of time and effort that is spent in analyzing stocks and in determining the value of the stock and how it's priced can be based on what sort of dividends get paid. So when you own a share of stock, the company that you own that share of stock in may pay out dividends to its shareholders, and that can go into the consideration of how the stock is priced and stuff. So, I mean, it's just this huge, vast. Yeah, I just have like formulas bouncing around in front of my eyeballs. It's crazy.
Love it. Katie, do you have time for one more question before we move along? What are stock prices based on?
That's going to be based on a lot of what Court just talked about. It's supply and demand. It's going to be a market sentiment. It's going to be so many different things. Where you have seen situations is, I've told on myself about, there was a certain stock that had an initial public offering, went public, things like that. Everyone was super excited about it. So what does that mean when everybody got super excited about it? More people kept buying, so there was less shares available. So then the price went up. And so you hear people talking about, I bought at the peak, because they jumped on the bandwagon when everyone else was doing it. So the price has gone up. But it could be, rumors can cause prices to go up or down. As you hear about, earnings reports. This is something about the pricing of an actual stock. It used to be information took longer to spread. You would have newspaper postings of the earnings reports of these companies, and then the stock market would react because somebody would read something. Now, granted, you still had rumors where you got, Cam over here going to every seedy bar telling everybody, oh, you better get this stock, you better get that stock. But nowadays, information travels so quickly that platforms like Reddit, things like that, can really influence the price of a stock. And there's not that hard data to then tell you, oh, GameStop or AMC movies went up to X amount of dollars. I'm going down rabbit holes. Think about it. Why were Beanie Babies so popular? Because everybody was talking about it, and it made them scarce. And so they weren't really that special. If you watch the documentary, they were around for a while and nobody was really grabbing at them until the buzz started happening. Same thing can happen with stocks. It's all of a sudden, nobody really knows, why is Chipotle doing so well? Why is this one doing so well? So I can't really answer the question except for, like Court's response, there's a lot of different pieces that go into why a price moves. And so you really have to make sure when you're choosing to invest in individual stocks, what is your outlook on that company? What is your purpose on it? Are you trying to just buy a stock, hold it for a tiny bit, and then dump it? Or are you looking at it long term? You really like Cam's Disc Golf company because you feel like it's going to be a great company long term.
Mm-hmm. Yeah, that all makes sense. Well, thank you both for answering my questions that I peppered throughout. While you were talking, it reminded me of a book that David is very fond of. It was published in probably the late 70s, early 80s, called Umps Fwat.
Yep.
Have y'all heard of this?
Oh, yeah.
You're probably like, what does that mean? It's about a caveman named Ump, right? And so he had this club to kill woolly mammoths, if I'm remembering this book correctly. But they also liked to play a game kind of like baseball. They would use that same club. And he had the best club, and people wanted that club. And it talks about selling and business. He created a business out of it, and all the cavemen wanted it. I found an excerpt for those reading along. This would be pages 18 and 19 on the book. It's a children's book, mind you, so just a few words with some fun images along the way. Again, it's about cavemen. So in this illustration, there's hundreds of cavemen standing around. I want one, me too, blah, blah, blah. And it says, sometimes these people, like Bunt was another caveman, are encouraged to use their savings to invest in new business ideas because there is a possibility of making a profit. These special words are capitalized that you can learn. People who invest in a company are called stockholders or shareholders and are considered owners of the company. The company, in turn, pays dividends. That's one of those buzzwords we use, use a lot.
Kickback.
To these owners when it makes a profit. Because profit is a way of measuring success of a business. The more profit a company makes, the larger the dividends for these stockholders will be. So I felt like that little passage tied into what we're talking about now. Really down to the basics.
Yep, absolutely. Okay, time machine?
Time machine. Cameron, do we have like a nifty time machine noise that you could make so we can go back in time to the origins of the stock market?
Did that work?
Sure.
That worked. So origins of the stock trading because the stock market concept is more than 400 years old. It's older than the United States itself.
We've already talked about the fact that basically a stock market offers people who buyers and sellers, because you have people that own the stock and you have people who want to buy the stock. The stock market provides a place for these people to get together and trade their stocks. But the idea of a stock market, like Katie said, has been around for centuries, and the idea of stocks and the ownership in companies has been around even longer. So, I mean, trading shares of stock goes all the way back to like the 1400s. I think we've talked before about the early businesses when they were sailing the world after they discovered that the earth was round. And they were sailing the world trying to get goods from one place to another. The way that they spread out their risk of the boat sinking, literally the risk of the boat sinking was they would have multiple people investing in it. And these people were kind of like the what? They were taking their money and putting it into this investment, backing this boat mission to try and hopefully when the boat got where it was going and they made a whole bunch of money selling whatever goods that were on the boat, then the people that had invested in it would get their money back and get a little extra to boot. So they were actually doing it to literally see their money grow. And that kind of investment is the earliest sort of concept of stocks and stock trading.
Well, and it's, the Amsterdam Stock Exchange was created back in 1602, and it was selling paper shares to help fund the 80-year war between the Dutch Republic and the Spanish Empire. And so, with this, they have the Dutch East India Company, which I think a lot of people have heard of. And this was the first publicly traded company that was a part of that. But it's still, this stock market still exists today as the Euronext Stock Exchange. So something that started back in 1602. Some form of it is still around.
Well, 1602 is not that long ago. The New York Stock Exchange was founded in the 1700s, so it's not that much older than the New York Stock Exchange.
Yeah, it's over 200 years old. And what happened with the New York Stock Exchange, May 17th, 1792 was the founding date. In its earliest days, stock trading was done in the coffee houses rather than a specific building. So get your coffee and do some trading.
The New York Stock Exchange wasn't an actual building. It was just a group.
It was a group. It was a feeling.
It was a mindset. It was a
mindset. I'm sorry, coffee shop. This is actually the New York Stock Exchange right now. This table has been taken over. And so, the birth of the U.S. Stock Exchange, or stock market, that Buttonwood Tree Agreement, a small group of merchants meeting underneath the Buttonwood Tree in New York to buy and sell stocks and bonds. So we talked about, Cam, your question was, what is a stock market? And I said it's a place to facilitate the meeting of buyers and sellers for these transactions to happen. So this tree was the facilitator. And it was an informal gathering, became the foundation for what we know today as the New York Stock Exchange, or you may see it NYSE. Members had a dress code. They had to gain a seat to the exchange. So yes, I'm picturing like it's a public place. There's this tree.
Yeah.
But yet it's like, oh, no. If you're not dressed appropriately, you can't come be a part of this.
Yeah. There's something tickling in my memory from some movie where one of the characters in the movie says, my family's had a seat on this exchange since the very beginning. And the guy's like, well, too bad. You're losing it now, buddy.
Yeah. So this was probably a high society, different, very affluent individuals in New York. They did have a price they had to pay, a fee, which increased from $25 to $100 by 1837. So not only did you need to dress a certain way if you're coming to the tree, which is the New York Stock Exchange, you also had to pay a fee. And, also, New York Stock Exchange, we hear a lot about, but there's also the Philadelphia Stock Exchange, which was founded in 1790, was the first U.S. stock exchange and helped shape America's early financial markets. Okay, so, we could sit there and go through an entire history lesson. And y'all know I used to love my, case history segment. But instead, I'm going to kind of just talk again broadly about some of the stuff with the stock market itself. So the New York Stock Exchange was one of the first buildings in North America to have air conditioning. It was built in 1903, and this building was used had absorption machines to provide air conditioning. This made it the first building in North America to have any kind of air conditioning system.
I bet it was a popular place to be.
Well, and they're smart because, hey, we have AC. Come and trade. It's great business. Why don't you come over here? Oh, while you're enjoying our AC, why don't you also place some trades, do things like that? I mean, makes sense. One of the things that David talks about all the time is how, things in Washington moved a lot quicker before they introduced air conditioning.
Yeah, I have heard him say that.
Because then it's like they had to get it done before that DC heat started rolling in.
before the summer heat off the swamp.
So computers were introduced to the New York Stock Exchange in 1966. So long before computers became a part of almost every business, they switched to an automated computer trading system December 20th, 1966. These early IBM computers were a far cry from what we use today, but this helped to improve efficiency. So really the stock exchange had to be cutting edge, had to have AC, had to get these computers in because they were trying to be that great facilitator and working with U.S. markets, but then starting to expand and be putting together buyers and sellers from all over. And so, obviously, New York Stock Exchange has presidents that are running them. You may see, if you pay attention to certain channels, you may see people going and ringing the stock exchange bell, different companies being honored. There are huge traditions associated with the New York Stock Exchange. Closures. This is something that pet peeve of mine. The New York Stock Exchange, the bond market, the stock market, because there's a little bit different. They rarely close, but they do have certain hours they operate. So for instance, here in Memphis, if you call me at 3:05, the market's closed. I can't do anything until tomorrow. And there are certain days that the market is not open. Mm-hmm. And for instance, it's pretty much your basic, Christmas, Thanksgiving, things like that. It is not as many as bank holidays. Bank holidays have way more than the stock market has. But for instance, we just had Jimmy Carter just passed away and the stock market closed for that.
Yes,
now, that was not one that was pre-printed.
That was not scheduled, but yes.
That is one, hey, we need to do this. And so the New York Stock Exchange was closed for 4 months during World War I, as well as a few days following 9/11 and Hurricane Sandy. So those were rare occasions that happened. And, otherwise the market remained open in some capacity, even after the attack of Pearl Harbor, during COVID, all of that. They made it work to make sure that these platforms, these facilitated places were still open and operational.
One of the things that we haven't really gotten into, and we won't get real deep into it, but I already pointed out that most people in their minds, when they think of the stock market, they're probably thinking of scenes from some movie or TV show that's the New York Stock Exchange.
That had their special jackets.
Yeah. The NYSE, you might have seen those letters. That stands for New York Stock Exchange. And then there's also the NASDAQ, which is not a physical place.
Okay.
It's a digital stock exchange. And usually the companies that you find sold on NASDAQ are usually more like tech companies and so forth. Like I remember when the tech bubble burst, NASDAQ took a massive hit and people were woe is meing. So you can have an exchange without actually having a physical location and being present physically. And then clearly, obviously, just to sort of give you a broad idea of the market and what happens, we are located in Collierville, Tennessee. We're thousands of miles away from New York City. There's nobody that directly is employed by us that is on the floor of the New York Stock Exchange. So there are people that are on the floor of the New York Stock Exchange. But if you call us up and say, hey, I need some money from my account, and so we say, okay, well, we recommend you sell this stock. And you say, okay, well, then what we're going to do is we're going to go to our computer and we're going to place a request for a sale of that particular stock in our computer. And that's transmitted to our broker-dealer who does have people that are probably like physically located in New York City on the exchange. And basically, we are acting on your behalf. You are the seller. You have stocks you want to sell, so you're going to have a price that you want to get for your stock. And then there's somebody out there who is the buyer, and they have a price that they want to pay for this stock that you own that they're happy to buy from you. And the market serves as sort of the middleman.
Yep. And it can be done so much faster than before when it was paper and even back with those real slow IBM computers. So the speed that the market works. And I'm not going to dive into this because this is a whole nother thing, but I think we definitely need to do an episode talking about futures, because a lot of people, the stock market closes, it locks in, but then everyone goes, well, the market's still moving. Well, there's a lot of activity that happens from close to open. Mm-hmm. And that's a whole different story in that of how these things are moving, because you are dealing with things happening all over the world.
Things crappening.
Mm-hmm. Things
Let's
crappening
call this
all over
the crappening.
But I think we're at a good place to stop episode
Well, I still
one.
want to talk about pirates, but there is a pirate stock exchange where people can profit off of ransoms and stuff with the pirates. But that may be a fun little episode that we do just on a pirate appreciation day.
Yeah. So we've talked about our ventures, which are most definitely going to fail. We've talked about what a stock is.
Uh-huh.
What makes it go up and down?
The purpose of the stock market.
The purpose of the stock market, and then a little bit of history about how it started and how there was AC in the New York Stock Exchange.
And it all
Pretty cool.
started with the tree. And coffee houses and then a tree.
A butternut tree? No, what was it? A buttonwood tree?
Buttonwood.
The buttonwood tree agreement. Yeah, that's it.
But yeah, next week we'll talk about
Indexes.
All right, you ready for that closing bell?
No, ladies and gentlemen, there is the closing bell. You made it to the end of yet another episode of the BullCast podcast. If you liked what you heard and you'd like to hear more, please feel free to go to your favorite subscription service and sign up to have our podcast beamed directly to your device every single Thursday at noon. If you'd like to find out more about Cortland, Cameron, Katie, or Nicole, please feel free to go to our website. That website is bullcastpodcast.com. We've got bios there, we've got pictures, and we've got a place where you can drop a comment or suggest a topic you'd like to hear us talk more about. Hey, I mentioned pictures. We do have pictures. We have a lot of pictures, and we like to share those pictures on Instagram. Our Instagram handle is @BullCastPodcast, and we have an X handle, which is @BullCastPodcast as well. We also have a Facebook page, which is BullCast the Podcast. And finally, we work at a place called Pickler Wealth Advisors. We may have mentioned that once or twice. And if you'd like to find out more about us, because we have bios up there too, find out what we do at Pickler Wealth Advisors, find out what we could potentially do for you, find out about our amazing team and our boss, David Pickler, please feel free to go to that website. That website is picklerwealthadvisors.com.
That's advisors with an O.
Not an E.
Ladies and gentlemen, we've given you just the smidgest of a taste going out and trading, so we will be back. But for now, I'm Court.
I'm Katie.
I'm Cam.
And we're done.